All right, we are going to start right now for our webinar. And before we start, just a small risk disclaimer for everyone. So tonight's webinar is intended for educational and informational purpose only, and participants shall not take it as financial or investment advice, nor a trading signal. The accuracy and reliability of the information provided cannot be guaranteed. Pew Prime and I hosting the sessions are not liable for any losses or damage resulting from the use of the information presented. Participants are responsible for independent verifying information and considering their own financial goal and risk tolerance. So just a small risk disclaimer, and then we are going to start our webinar right now. So for tonight's webinar, we will be discuss about the non-farm payroll, because after 1 hour and a half later, we do have one of the major economics data that are going to be released later. So which is what we call the non-farm payroll as well as the unemployment rate. And historically, after this data release, right, it might be trigger a significant movement on the trends for the dollar as well as for the gold market. So this is a key thing that we are going to discuss later tonight. So for new trader, we really hope that you learn something for the non-farm payroll and then is able to enhance your trading strategy later. So this is the key topic that we are going to discuss, which is linked to the non-farm payroll. So this is the highlight. The first thing that we will be discussed should be on what is non-farm payroll, and then how and why can the non-farm payroll affect the certain asset classes movement, especially for the dollar as well as for the gold market. So we will let you guys have a brief understanding on what's happened if NFP were very good or bad. And then later, we will also analyzing the recent data trends. We will try to analyze that previous data or historical data on the US job market and then try to predict it. What will be the result of the non-farm payroll? Will be the previous economic data very good and supports the non-farm payroll to provide a positive reading or not? This is a thing that we will be also discuss later. And then we will try to link the impact of non-farm payroll towards the dollar. And then after the non-farm payroll things that we have been discussed, we will also talk about the what to expect next, which is the monetary policy from the Federal Reserve. So first thing, decoding the non-farm payroll, or what is the non-farm payroll? So for new trader, I want to explain in a very simple terms. Non-farm payroll represent a comprehensive count of paid US workers across all business establishments. So excluding general government employees, private household employees, employees of non-profit organizations, and farm employees. So to put in a very simple terms, non-farm payroll can be considered as one of the major indicator that show whether the US job market are resilient, are very good or bad. So to give you a very brief understanding is when the non-farm payroll provide a worse than market expectation reading, it means that currently the job sector in the United States are not as good as expected. Instead, there are still a lot of people are unemployed and they do not have a lot of job opportunity. So when this thing happen, means that hiring activity will be reduced. When you don't have a lot of job, you will be spend less. So when you spend less, your economy should be more on pessimistic view. Inflation will drop. It will also cause the Federal Reserve to consider reduce interest rates or maintain their very, very low interest rates. So this is a thing that can also link back towards the dollar trend. So to put in the simple term is, if non-farm payroll provide a worse than expectation reading, it means that currently the dollar are not very, very good. So when the dollar are not that good, right, there will be chances for the gold market to rebound back. So this is a key criteria that the non-farm payroll is going to happen. And then now economists are actually expecting the non-farm payroll might be provide a slightly lower than the previous reading. Previously, market participants are expecting the non-farm payroll might be provide reading on 216K, which is the previous reading. But as for now, right, economists are only expecting the non-farm payroll might be provide a reading around 187K. So it means that economists are expecting the non-farm payroll might be provide a lower reading. And then you can also notice that even before the data release, certain investors start to sell off the dollar because they expect that in tonight, there will be high chance that the NFP might be provide a worse than expectation reading, and then it might trigger a certain sell off for the dollar. So a lot of investors take their trades even before the actual data release because of the economist expectations. So you can also notice that gold price had shown some rebound and bullish momentum. So this is the main reason because economists are expecting the NFP might be reduced from the previous reading of 216K to 187K. But of course, for new trader or experienced trader, it's still advisable for you guys to continue monitoring the NFP data and then after the data release and see what strategy can you apply on it. Normally after the data release, certain movement will be happen. If the gold market successfully break above the resistance level or break below the support level, it might provide a clearer trend after the data release. So this is a brief explanation. So to put in the simple terms, NFP linked towards the jobs data. If NFP very good, it means that US jobs are very good, dollar might be increased. And if NFP provide a worse than expected reading, it means that the hiring activity in the US are not that good, and then it might trigger another significant sell-off for the US dollar. So this is how we analyze the previous data trend. So as for now, right, if you only look at the historical data, this is the data from the US, and then we are mostly focused on the US jobs data. If you are going to focus on the US jobs data, you can notice that recently most of the economics data are supporting that there will be chances for the NFP might be provide a worse than expectation reading. You can see that the first data US initial jobs claim are actually increased aggressively from the previous reading of 215K increase to 224K. So for new trader, initial jobs claim you can understand as the unemployment benefits that people in the United States that claim from their government. So to put in a simple terms, right, if US initial jobs claim provide a worse than expectation reading, it will likely to cause that, higher than expectation reading. It means that currently there are a lot of people are unemployed in the United States. That's why the number of the claiming benefit from the government are high. So it's not good for the whole economy. So to put in a simple terms, when you notice the US initial jobs claim provide a higher than expected reading, it's normally not good because it means that there are more people are unemployed and then they go and claim towards the government. So if we are going to look at the previous data, it's still quite obvious that there will be chances for the US job sector are not as good as expected. Initial jobs is one of the proof. Another thing is regarding on the ADP, US ADP non-farm employment change. So this is also one of the indicator for the non-farm payroll. Normally, investor will also try to use the ADP data to predict the NFP. If ADP data provide a lower than expectation reading, it means that job sector in the US are not that good, and it will increase the chance that the non-farm payroll data might be also worse than the expectation. And then you can notice, right, recently, ADP non-farm employments are actually declined aggressively from the previous reading of 158K decline until 107K, the reading which is also worse than the market expectation. So this is also another thing that can support the NFP might be provide a negative reading combined with the continuous claims, these three data. But in positive fronts, we do have another jobs data including the ISM manufacturing employment provide a better than expectation reading, and then GLRTS job opening. A lot of people are hiring in the United States. So to put in a simple terms, for this time NFP, compare with this time NFP with previous one, for tonight's NFP data, their reading might be very, very mixed. The chances for it to better than expectations or worse than expectations are very, very unclear compared to previously. Previously, right, you can notice from the historical jobs data saying that currently the job sector in the US region not very good, because you can see on previous charts or previous NFP data, before that data release, a lot of jobs data provide worse than expectation reading. But as for now, you can notice that the data are very, very mixed. There are few data support the NFP might be provide a positive reading, and there are also certain data that might be cause or reduce the investor confidence towards the NFP tonight. So it might be quite challenging if you want to trade for the NFP data. So it's better for you to continue monitoring the gold charts, because if you want to refer on the gold charts, everything are very, very clear. And then you can also notice, right, as for now, the global investor still don't have a good initiative or trends they are still not able to predict a very good trend for the gold market yet. You can see that historical H4 candlestick, most of the H4 candlestick, their movement are very, very slow. Keep hovering in this range. So it means that not only us, the global investors are still waiting for the non-farm payroll data. And especially after the data release, then what can we do next is continue monitoring the resistance level as well as the support level. If gold market after the data release is successfully break above the resistance level of 2055, then next target that we can eye on should be around 2065. So if the NFP data provide a worse than expectation reading, it's not only NFP data you need to focus on it. Of course, unemployment rate is also another crucial economics data. And economists are also expecting that unemployment rates might be also increased, which means that more people will be jobless in the United States. So it's still better for us to continue monitoring the resistance level, which is 2055. After this data release, then we can continue to monitor until next resistance level, 2065. But of course, if the non-farm payroll data provide a worse than expectation reading, then it might be what? If the non-farm payroll data provide a worse than expectations reading, gold price will go up. And if NFP suddenly provide a better than market expectation reading, then it will be cause the gold prices to drop back. So 2055 can be considered as the main resistance level that we must be focused on it. So if it's still unable to break out above, then we are expecting gold should be dropped back until 2045. So NFP is good criteria for us to focus on it, because after the NFP data release, then you need to continue monitoring the charts, 2045 and 2045. If better than expectations, then gold might be go down. Target should be around 2045. If NFP worse than expectations, then dollar will go up. Then next target for it is 2065. So this is how we monitoring on the chart. If you ask me whether the NFP will provide a better or worse than expectation reading, I would say that currently the prediction are very mixed. It's still very unclear, because if you want to, according to the historical jobs data, we still cannot find a very good indications yet, because they are still quite mixed. So this is explanation for the non-farm payroll, and especially for those traders who don't know what to do. It's still advisable for you to have some patience and then wait until certain break out before you enter the trades. Okay, so after you understand the non-farm payroll, another key thing that you need to monitor is the monetary policy, especially from the central bank, the Federal Reserve. This is a key thing in 2024 that we must be focusing on it, because in 2024, there are big news regarding on the Federal Reserve to whether they will cut the interest rates or not. And then normally, right, a lot of investors will use the non-farm payroll to predict whether the Fed should be cutting the interest rates or not. So normally, if the NFP data provide a higher than the expectation reading, a very good job sector, job performance in the United States, it will normally delay the Federal Reserve to cut the interest rate in future, because if job sector are very good, it means that US economy are good, inflation might be high. So when inflation are high, the Fed might be continue to maintain a higher interest rate in longer term basis. And or if the non-farm payroll provide a worse than market expectations reading, right, then there will be increase the chance for the Federal Reserve to cut the interest rates. So if you guys still remember previously, Federal Reserve just launched their monetary policy. They maintain the interest rates unchanged. But the statement are very important, because they're saying that currently the Federal Reserve still do not have a clear identifications on whether they want to increase or decrease the interest rates. How will they determine whether in future they will increase or decrease the rate or not? They will be highly focused on the economics data. So it's not just non-farm payroll, it's just not as simple as the jobs data. This is one data that can also cause the Federal Reserve to change their monetary policy decisions also. So if the NFP data provide a better than expectation reading, then in future, what you need to focus on next thing is what will be the Federal Reserve policy. Okay, so as for now, if you are going to look at the charts, there will be higher chance that the Federal Reserve might be consider cutting their interest rates on March. The percentage should be around 35%. They will be considered cutting the interest rates, and 0% they will be maintained on it. So whether it will change or not in future, we are still need to continue monitoring the economics data to have a better predictions on NFP. Okay, so don't give up if you miss out the trends for the non-farm payroll. So you can try to analyze what will be the result of the NFP data and then try your best to predict what the Federal Reserve is going to do in future, because this is a key thing and as well as the main thing that are going to happen in 2024, the monetary policy decisions. Okay, so the direct impact for the non-farm payroll should be on the dollar index. So normally investor will try to monitor the dollar charts. Dollar index means mostly focus on the dollar charts lah. So if the NFP data provide a higher than expectation reading, then dollar might be rebound from this crucial support level. But if the NFP data provide a worse than expectation reading, then dollar might have high chance to break below the crucial support level of 102.85. Longer term basis, it might be dropped aggressively. So need to stay tuned on the dollar charts before you enter the market. But as for now, right, we can see that a lot of investors are still expecting that NFP might be provide a worse than expectation reading. That's why they even enter the trades for the dollar. And then dollar also successfully break below the support level of 102.85. If you ask me whether there will be high chance for it to drop or not, according to technical price, there will be a chance, but you need to aware of it. If the NFP data suddenly better than market expectations, no matter how nice this breakout is, there will be always chances for it to suddenly rebound back. So for new trader, you need to stay tuned on it. As for now, technical analysis is just one of the two, but not the main two. The main thing that we must focus as for now is the result of the non-farm payroll as well as the unemployment rate. So even though how nice is the technical analysis, normally after the data release, everything will be complicated. And then we need to see that whether the data is better than expectation or not, then we try to re-enter and refocus back on the support level as well as the resistance level. This is how we strategize on the NFP things. Okay, so the dollar is the main thing. You can try to understand dollar trend and link towards other asset classes. For example, if you are expecting dollar will be dropped, the next thing that you can focus on it should be on the gold market because they are the formula one. So when XAU is behind, when USD is behind, XAU is in front. It means that when USD go down, XAU USD, the formula will be increased. So if you are expecting dollar might be dropping aggressively, if the NFP worse than expectation, same goes with the unemployment rate, then dollar might be dropped. Next thing, gold price should be break above the resistance level of 2055, then extend its gain. So this is how we analyze the NFP data. And of course, it's not just NFP data are very important recently, just a small update of the economics calendar in this week and trying to update you guys what's important recently and certain strengths and the impact of this economics data. The first thing should be we need to focus on oil market recently. This is something not related with NFP, but I still feel it's quite interesting to share with everyone to make you guys have a better understanding on how normally the economics data is going to affect certain asset classes. The first thing should be focused on the crude oil inventory. As we can notice, right, recently the oil inventory data are increased aggressively from the previous expectation of declination of 9.233 million. As for recently, the oil inventory actually increased by 1.234 million. And then the increment are also much higher than the market expectation, which is the expectation of declination of negative 0.217 million. So economists expect the oil inventory should be declined one, but end up the final reading of the oil inventory increased aggressively. So when oil inventory increased aggressively, right, if you look at the oil charts, the first reactions for the oil are actually drop aggressively. So this is how we need to understand on the economics data and trying to apply with fundamental as well as technical all together. And then another important criteria is regarding on the Federal Reserve monetary policy decisions. They maintain their interest rates at 5.5%, but they do not provide a very aggressive statement now. That's why overall trend for the dollar are slow because they're still saying that they need to continue monitoring the future economics data to predict what will be their monetary policy decisions in future. But as compared with the Bank of England, so even though Bank of England also maintain the interest rate, but they provide a quite hawkish tone, saying that currently the UK inflation are not as low as expected. UK inflation are still haven't hit the central bank target yet. So whether the Bank of England is going to cut the interest rates or not in short-term basis, the Bank of England, they do not provide a clear clarifications on it. So a lot of investors take this as a hawkish tone from the Bank of England. That's why pound sterling rebound back. Even though on recently the trends for the pound are more pessimistic because on technical front it's break below the support level and drop further. But just after the Bank of England meeting, it starts to rebound back. So this is a proof that currently the economics data are very important or certain events are important. This will link towards the non-farm payroll also. Even though as for now, if we look at the charts, there will be higher chance that the dollar price should be dropping further because economists are expecting NFP might be provide a worse than expectation reading. And even like that, if the NFP suddenly give the reading that suddenly out of market expectations, there will be always a chance for the dollar to suddenly rebound back. So you need to stay tuned on it for the dollar chart. So 102.85 crucial support level, resistance level 103.60. Always monitor on the support and resistance level after the data release to have a clearer signal. So after you guys have a brief understanding on what is non-farm payroll and then why it's so important, now we will try to link to a certain trading strategy that you might be considered to see whether it will help you or not. The first analysis we need to do should be on the gold market. As for now, right, you can notice overall trends for the gold. You can actually draw a Fibonacci retracement charts over there. So after you draw it, all the support and resistance level will be nicely formed. So you can try to use this support and resistance level to enhance your trading strategy. If you want to look at the gold charts as for now, in today's market, gold market are actually increased aggressively because certain investors are expecting the NFP might be provide a worse than market expectation rating. Then gold price go up. And currently the gold market are still testing on the resistance level of 2055. There are certain investors are dog on the where they are still not sure whether the NFP will be provide better than expected reading or not. That's why certain investors consider to TP and several investors consider to have some wait and see mood after it's testing the resistance level, which is this is the Fibo 61.8% resistance level, which is you can not see that nicely formed. This is also the previous resistance level. So what can we do now is continue monitoring the charts, even though there will be higher chance that NFP might be provide a worse reading that can cause gold price to go up. But it might be still advisable for you guys to have some patience and wait until this data release. After data release, then you see whether the gold price should be experience a nice breakout or not. If gold price successfully break above 2055, then according to the resistance level, next target we can eye on should be 2065. And if NFP suddenly provide a better than expectation reading, dollar might be going up, gold price might have higher chance to go down. So if gold price really go down, next target that we can eye on should be on the Fibonacci 50% level, which is 2045. Then the next support level should be 2035. So before that, we are expecting gold might be hovering, consolidate in this range, but as a good trader, it's better for us to monitor on whether there is any nice breakout. The resistance breakout should be more pay attention because a lot of investors are expecting NFP might be provide a worse than market expectations reading. So you can try to eye on the 2055, see whether it will experience a successfully breakout or not for the gold market. Because dollar already successfully break below the support level. So this is how we analyze on it. Of course, we still need to stay tuned on the NFP data tonight before we enter the trade. Now we still have around 1 hour for you to have a better strategize on the gold market as well as for the dollar market. So I think this is all the most important thing that you need to understand before the non-farm payroll data release. And this is it for the webinar tonight. Now I'm going to open for Q&A sessions. You guys have any questions that you want to ask me regarding on the trading strategy on certain asset classes? If you have any questions, feel free to type in the chat box. I will try my best to answer on it. So to answer Ogeshi, I think I already provide an idea on what to expect to trade on gold later, right? Once again, thank you so much for all of your support. Naomi, thank you so much for your supporting towards us. And if you guys have any questions, if not, then we are going to end our webinar tonight. All right. So thank you everyone for your time. And then we really hope that this webinar will able to enhance your whole trading journey. And then we really hope that you might be gain money later tonight. Joe Dice actually say that the expected value for non-farm payroll is low. Yes, according to economists' expectations, because you can notice on the investing.com, this is the economist forecast. They expect NFP might be provide a lower reading compared to the previous one. Previous one is 216K, actual reading is 187K. After data release, right, you need to compare on whether this data is higher than the forecast or lower. You don't compare with the previous one. Try to compare with the forecast. So if the actual reading higher than the forecast, higher than 187K, it means it's very, very good. Then next target you need to eye on should be on the unemployment rate. If unemployment rate are very, very high also, or sorry, if unemployment rate are very low and then NFP are very, very good, then there will be higher chance for the dollar to increase more. Don't confuse, yeah. Unemployment rate is the higher the worse because more people don't get job in the United States. Dollar normally will drop. And non-farm payroll, the higher the better. So you don't confuse. Things that can support dollar to go up is NFP better than market expectations, higher reading, and unemployment rate provide a lower reading. So this is a key thing you need to eye on it. If the reading are mixed, for example, NFP is good but unemployment rate are bad, then you need to monitoring on the charts already. We cannot say that which one is important. Both of the data are important. After these two data release, if they are really mixed, then you need to monitor on, then you need to continue to monitoring on the zone around here. So see whether it will break above 2055 or 2045. Yes, for to answer Joe's question, is to compare actual value with the forecast is better. And then not only NFP is important, unemployment rate meanwhile, which is also another most important thing. Peter Afolabi, yeah, we are actually using the investing.com data. They will try to take data from global economies to make some predictions. So it's better for you to compare with the actual reading and the forecast instead of enter trade now. Even though a lot of investors already enter trades because they expect NFP might be bad due to economics forecast, but there will be always changes even before this data release. So you cannot 100% guarantee on it. Okay, so I hope I answered all of your questions. Any more questions? If not, then we are going to end now. All right, so I assume no more questions. And thank you everyone for your time for supporting us. And then, yeah, wish you guys have a happy trading journey later today. And good night, everyone. Goodbye. Thank you. See you guys again next week.